Good evening, everyone. Now, today we'll be looking at lesson 8. We're basically looking at the trading strategies today and how they work. And then next week we'll be looking at starting out on the trading plan. But also I'll talk about the concept of the trading plans and what I expect to be in the trading plan. But also be doing this lesson here a second time next week, because this will need more than 1 hour. This is going to need 2 hours. So next week again, we'll be doing the same again, with also an additional time given to the concept of a trading plan and what the trading plan is about. Okay. For the homework last week, this chart here is this is the euro. I can't really see this. Oh, the euro New Zealand. Now, basically, what we can see here is that this chart basically it's not really in an uptrend. It's just moving within this range. So, it's almost like a sideways market type. It's not doing anything on this daily time frame. Yeah, since October last year, it's just been up to this point, down to this point, up to that point, down to that point. So it's not really doing anything for the last 5, 6 months. Okay, so it's just within a range. So, you know, I probably wouldn't have bought there, and that wouldn't be a wise place to buy. You'd probably want to buy here and want to sell there, okay? Because that's where we can see this range. Okay, it comes down to here, pulls back up to there, comes down to there. So you want to buy there, sell there, sell there, sell there, sell there, buy here, yeah, within those zones, okay? Um, so that's for that homework, okay? Um, uh, okay, let's download another one. Okay, for this chart here, okay, um, let's wait until it downloads. Okay, guys, now this is a bearish engulfing, but I can't really see it properly, so I'll have to tell this student that I need to see the chart looking the way. I don't like this, ambiguity, where it doesn't look green, it doesn't look red. I want red. I want it, if it's red going, or green, we just want that color. Now, also, we wouldn't, I've got an engulfing candle here, but we wouldn't sell like this because, one thing I'll say about trading is that it's really important that you go with the trend, and this is clearly an uptrend. So even we could get 10 engulfing candles. Yeah, look, engulfing there, came down, triggered us in, stop us out, would have lost on that trade. Yeah, so every time we've got an engulfing there, when probably triggered into this trade, lost on that trade. We've got this one where it breaks way above there, one of those sort of spinning top, but we're not going to be talking about that. I don't like trading that one, especially with this type, with the, I don't like trading with that one. But anyway, all of the engulfings in an uptrend, we've got to see it form in a different way, and that's what I'm going to be showing you today. When do we take trades like these? Okay. So I wouldn't, even though we see a bearish engulfing, we still wouldn't take the trade. Okay. Don't place any trades whatsoever on a demo account. Right now, basically, I realized I wasn't recording bit of what I was saying, so sorry, I'll just have to repeat some of it. So those people who are missing tonight, who've got work and so on and so forth, they can get the recording. So as we said, we're looking at the double top. We're looking at the double bottom. We're looking at how to place a trend trade, and that's what we're going to start off with. We already know how to place a trade with this concept. Also, as I said, from now on and from now until onwards, you're going to be starting to place trades using the engulfing candle, yeah, at the supply and demand zones. Also, the pin bar, and also the the pin bar combo, trade. Okay. Now we're gonna find the regions on your chart for your homework now. That is, identify these zones, showing them on your charts, right? And what I needed to do is all of these zones, because you almost want to make them perfect, right? And then you're going to be then email me these through on by Sunday, okay? So you're going to find any region on any of your graphs, right? Um, that you can see an exact replica setup of what I'm going to be teaching you today. So therefore, you can then, right, use that in your template, because let me tell you something, right? Last week I lost a good sum of money on the oil trade, and that's the thing. Every time when you're on a roll, because I've been just winning, and I just don't know. And you know what? I go through my ritual. I read my trading. I read my trading plan. I just do everything, and then I just stop reading it. Stop doing what I normally do, because you almost feel like you know it. So because you know it, you don't you don't look at the form, but because you say you know the formula, and I don't know what got into me, but and also because one of my clients that I'm trading their account, you know, so far I've made like only five, it went up to £500, and I was really pleased. So I wanted to say to this client, look, take out £1,000 out of your account as a starting point. So basically, so I said, you know what, the trade looks suitable. So I went in £350 risk. Now my risk on any trade is always 100 and maximum £120. And you know what, the trade started going in my favor, was up by £150 at one point, right? So I was like, wow, amazing, this is gonna be big. But then Donald Trump came out and said he's gonna pull out of the deal. I think it's with Iran. And then, Iran, they're the oil oligarchs, so so obviously, if they turn off the tap on oil, then and then what happened? It just rocked up back in the opposite direction, blowing up £350 there. So wiping out all of those profits, and blowing up some on my account, because I put I put on a £200 risk as well. So but normally, right? That's not what my trading is about. My trade is about my maximum risk is 120. And this is what I'm saying. You see, anytime at all, and remember, guys, we're doing the psychology. We're talking about risk management. Um, we're also talking about money management as well. So as I said, I'll be sharing these things with you. Now, the fact that you're getting a real trader telling you all of these things, you know, I closed out a few trades last night, good profits, but at the end of the day, until, and you know what I did, right? I went and I dig and I dig and I dig for my because I put it down and I just couldn't find it the other day, and I know I put it where I put it, and because I was just tidying my office table and so on, and you can't afford for that to happen to you. Yeah, you can't afford. So roughly, so that's 350 plus £200. That's just so you're looking at 500 and £550. But I must say it was on my client's account. Fortunately, he was in profit already, so it wasn't that bad. But um, you're looking at, let me still try and remember because my brain. It was going to be £350 risk to make a minimum of £1,000. Because, and that's the thing with trading and understand, you will basically go in and say, you know what, I can't do anything wrong. I'm just so good. And because I know I'm good, and also because I know that even if I lose, I'm gonna make back my money. I know that even if I lose, even if I made some big mistakes, I know I'm gonna make back my money, provided the mistake is not too big. Because if I, if I've got a £10,000 account but I risk £5,000, then it's gonna take me. I'll have to increase my account by 100% to bring it back to break even. So I'd have to take on a hell of a risk to get it back up to there. Now I know my risk factor is a maximum £120 per trade, and I should only have a maximum of 3-4 trades open. If the other 3 trades are open and in profit of at least 1 to 1, then I'm entitled to open other trades. Sorry. So basically, I know what my risk tolerance is. I know everything about the trades, but I'm telling you, I don't want you to do anything like that. Please don't do anything like that. And let me tell you, it's so easy to happen because just imagine, right? Every week you go in and you know you're playing a sport against someone, and every week you beat them. Every week you beat them, but this person going away practicing. One week this person come in and whip you, and you're like, oh my god. So then you go away. You used to train for this person, and because you're beating this person over and over, you stop training, you stop getting yourself equipped. So then you come in and just by surprise, because you let your guard down, you stop doing what you used to do, you become complacent, and that's what will happen in trading. And a lot of the stuff you hear out there, and a lot of you go on the guys who become millionaire to trading, they go through these things, and sometimes they said to themselves, even guys who are multimillionaires still makes mistakes. Now, my only thing is to try and do for you, so probably just to condition you just by saying to you, look, if you haven't read your trading plan, don't take a trade. Because this only, and let me tell you something, this only ever happens to me after a consecutive winners, and I would say probably an average 6 winners, right? A minimum of £100 per win, right? And then what happens? I'll end up put on a big trade, and I'm sometimes I'm not sure why. Um, well, yeah, I'm not sure why, but you know what I've got to do? I've just got to learn that, Marlon, you're not bigger than this thing. You've got to make sure that you put your trading plan on the table and deal with it. You know, put a trading plan on the table and just read it and just follow it. That's as best that I can tell myself, and I just need to do it. Yeah. So that's the psychology, guys. That's the money management. That's the risk management. In terms of, and the risk management is that maximum 120. The psychology is this: never put a trade on until you've carried out your rituals, which is reading your trading plan, which is whatever you want to do. If you want to tap yourself on the head, say, look, follow your rules, tap yourself on the hands, whatever you want to do to make sure that you're disciplined. Because if you're not disciplined, I can guarantee you're going to do exactly the same thing. So please be disciplined. Okay. Now, the trades that you're going to put on, as I was saying, you're putting them on the demo account. Okay. What I mean by that is, um, there should be no live account trades, none whatsoever. And I'm also saying to you as well, when you get to the time where you're going to be doing live account trades, I would recommend that you stick it in the WhatsApp group. Send it, because I'll have my phone with me. Just take a photo of it, or send it to my, WhatsApp it to me, and then I'll have a look at it and check it for you to see if it conforms to the rules that I've taught you. And then you'll have that sort of reassurance to say, look, at least I know I've done it correctly. Because if I've put a trade on and the trade was done correctly, okay, then if the trade is a loss, then it's a good trade. If the trade was a loser, okay, sorry, if the trade was a winner and it didn't conform to our rules, then that trade was a bad trade. You could make £1 million on that trade, right? And you didn't follow your rules, then it was a bad trade because it didn't follow your rules. So what I want you to appreciate is that once you've conformed to the rules and your trading plan, right? Now, and that trade, whether it's a winner or loser, you've got to feel happy with yourself. And that's the whole concept you've got to get into into your mindset right now. Okay? So let's have a look now, guys, at what it looks like now. This is trade market and the correlations and so on, right? Everybody should have that already, yeah? Because all these are going to form our trading plan. And remember, this one here, where the correlation is concerned, it will update accordingly. Because if you've got one situation where people falling out Brexit, this and so on, then the market will be skewed, according to different events. Different price wars, in terms of currency wars, between countries and so on. Yeah. So this will be updated, and I would say update this probably every 3 months. Yeah. Or you can just use it in the nights when you're going to be putting on a trade, but make sure you've got it in your trading plan. Okay. Now, the first thing we're looking at now. Okay, no, that's my. Okay, right. So that bit there is my trading plan, which you're going to be looking at next week. Okay. Okay. So we did go through this last week, right? Can let's say a yes if we had gone through this last week?
Yes, we did.
Okay, brilliant. Okay. Now, so basically now we looked at predicting the trend change. Now the market, yeah, it's going down. So the market, then look at this now. So the market breaks up. So this was a high, market breakdown, pull back. Now this is a high, breakdown, pull back. This now becomes, yeah, a lower high. Sorry, a low. That's a lower high because this high is lower than that one. Break down, pull back. That becomes a lower high. Okay, yeah, that becomes a lower low. Break down, pull back. Yeah, a lower high. Break down. Now, if you notice here, right, the market then breaks up to this point zone, pull back. We've got an engulfing candle there, which is either it has to be equal to this. If it's down there, then we're not taking it. We're not going to look to buy there. Now, if you notice what I call this, I said this is a reversal trade, and the probability of this trade is low. However, if this trade works out, you can have this trade running for a long time. I would recommend, if you see this one here, where this low, if this low breaks this one, I would recommend you take that trade. Okay? I wouldn't recommend it at all. So the market breaks above, break below this low to give me a lower low, break up, pull back. Okay? So this now, because this was my low now, this becomes my higher low. Break up. This now becomes my higher high. Okay? Pull back. This now becomes my higher low. Break up above this high, higher high, higher low. Okay? So what we could do is every time the market pull back to these zones, then we're looking to buy. Okay? Now, as I said, right? This one here, I have taken a few of these trades. I've even taken one. Let me show you. Um, Let me show you one of the trades I took there. Okay, so right, one of the trade that I took this one here, took this one, got my profit there. So break above, pull back. Now, say for example, if you notice here, right, if I was gonna take this trade went all the way up to there. Now this high was higher than that one, so I'm not gonna take that trade. It's because it's consistently making higher highs. So the best trade possibly probably to wait for it to pull back, okay, and then take the buy there. Yeah, wait again for it to pull back to take the buy there, okay. But however, the market then breaks up to this zone, okay. Market breaks up to this zone. So therefore, what happened? And this high was lower than this one. I had a pin bar. I had a pin bar there. So what I did, put my entry there, my stop loss above there, and ride it all the way down to here. Yeah, and I made a nice little profit there. Okay. Now, so see if we can find another one. Okay, right. Now, this one, however, um, this one basically is just sort of moving in between this zone. Really, it's not really going up. It's not really going down. Yeah. This one you can clearly see this one is going in a downtrend. Okay. Now, would I try and go and buy this? No. The only way I would have bought this is if it had made a low, pull back, and then come back to that point, which is similar zone before I would have want to take a buy there. Okay. Nothing there. See, if you look at this point here, this one, the market, every time the market comes up to this zone here, right, it turns back around. So what I was looking for here is that if the market had broken up, pull back to this zone, because if you look at this candle here, this was a pin bar, and I could have put an entry there and a stop loss there, but then that would have been too soon. I would have wanted to see sellers and buyers in a fight. Okay, I wanted to see them in a fight, one pushing it up, one pushing it down, but then within this zone here. And then if I can see it goes up slightly, then come back and then get the relevant either pin bar or combi pin bar or an engulfing, then I would take the trade. Okay. Now here if you notice, this market has been just ranging within this zone here. Just it's not going up, it's just ranging within this. So I'm looking to see, and if you notice, every time the market comes to this point, comes to this point, comes to this point, and then see we've got an engulfing there forming. Okay. Now I couldn't take this trade unless I see an engulfing. Okay, so it's probably a trade that I'll consider. Not sure, but I need to see some. I need to just see a bit more fight between the bulls and the bears, which is the sellers and the buyers. Okay, now this one here, I got it like just sort of oscillating there. Went down really nicely, but now turning back. But I've secured myself, so no matter what, I won't lose on that trade. Okay, now this is what we've got now. Now this trade was the same trade that I took from here all the way down to here. Now if you notice, every time the market breaks up, pull back, breaks up, pull back, breaks up, pull back. Now that's the reason why, I'll be looking to buy here now. I've just taken a nice trade, sell trade going down. Now I'll be looking to buy to take it back up to there. Okay. Okay, now this one here, this is the GBP USD. Now, if we look at the, let me see, if I look at this, because sometimes guys, if I'm going to be looking at the GBP USD, we've got interest rate decision, right? Was it yesterday? Okay, let's see, when is interest rate decision? Bank of England, the 10th of May. Oh, that's tomorrow. Okay. Now, if Nick Carney comes out tomorrow and and said, look, you know, we think the economy is fine, blah blah blah, then this thing might just rocket up and go up to there. Okay, now I normally this is what I would have done. Let me show you what I would have done here if I make this bigger and show you. Back in the days, I see this coming down, dropping after I already made money there, right? Okay, and if I'd allow this trade to run, let me show you if I did a pound a point, this is where I would have sort of entered there, yeah? You look, that's where I entered this trade anyway. If I did a pound a point, this would have been all the way down to here. That would be within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. £571, right? Of profits in 10 days, right? Now, and that's just if you're doing a pound a point. Now, on this trade, I took it all the way down to here. So, I just made just over £200 there. Okay. Now, I don't know, every time the market comes to here, something happened, comes down to here, something happened. So I was looking here. I didn't really get, this candle could have been like, my sort of combi pin bar, but because this bit here wasn't this was too high sort of thing for me. Now I end up we see this pin bar here, but we tend not to probably take the pin bar supply and demand at demand zones. But anyway, this market breaks down. Now this is what I would have done in the past. I would have put an entry there, okay, stop loss there for the market to go up. Now what I've noticed, every time I take these sort of trades, the market would come and trigger me in, and then going down. So the safety net that I've put in place is to make sure that I see that bulls and bears are fighting. Now, as we can see here, bulls and bears are in a fight, okay? And nobody's giving up at the moment. Now, Nick Carney might comes out tomorrow and say something positive for the pound. And remember, I don't trade fundamental, but sometimes the fundamental is what dictate. Because, for example, oil just rocket up because of, what's his name, pulling out on the Iran deal. What's his name? That man Trump. Yeah. The lowest. LOL means. Let me tell you. A question was asked. Let me just tell. Okay, it's this bit here. LOL, the lowest low. Right where it is now. So let me see. So LOL is the lowest low. Okay. Okay. So LOL is the lowest low. So this is what these mean. Okay. The highest high, higher high, lower low, and so on. First touch, double top, double bottom. Second touch. Okay. And there are just the 4 strategies that we are trading. Okay. With the candlestick. So what we've got to do is we've got to make sure that, yeah, because I might be putting in a trade entry there, yeah, with a stop loss there, and looking to target the market moving from there up to there. So I'm looking to target roughly 339 pip, and I'm risking 100, so I'll be risking like £114 to make £346. That's what I'll be doing. But let's see these guys keep on fighting. Yeah, let's see them carry on fighting. Let them do their fight. Okay. That one again. This was where the buy was. Okay. This trade here. Right. When I saw the market went, because every time it goes there, pulls back, goes there, pulls back, goes there. But anyway, the market then just break above. There was a fight here between the bulls and the bear. I got triggered into this one and got stopped out. Okay. So I call this a double top range bound trading, but now it's sort of broken out and it's just going up. Okay. This one here, which is the USD CAD, market breaks all the way up to here. What was I looking for? Yeah, I was looking, the market breaks up, pull back to this zone now. This line on here, this line here, this blue line, it's an indicator that's actually showing, okay? And these are my lines that I put on because that's what I'm expecting. Because remember, guys, that's what we'll be doing. We'll be looking for these things. If these things doesn't happen, then we can't really take the trade. Yeah, because because if you look at here, right, look at this move here. We got this move here, right, and we see the fights between the bulls and the bears. We can clearly see it. So in effect, because I was looking to take a trade here, but I really got the signal there, but didn't take that trade because I was gonna take it there, okay, but the market then breaks even lower to that point. But a lot of times, guys, it's best to say the bulls and the bears, let them just carry on fighting with each other because someone will have to win. Someone will win eventually. Yeah, someone will win because it's just people like me and you. Okay, this one here, the bulls and the bears again. And that's all we're doing. We're just finding where the bulls and the bears are arguing, and then taking the trade in that direction. Okay. Now let's go back to this now. Now the so what you're going to be doing for me, you're going to try and find, you're going to search for that region on your chart. Okay. Now, can someone tell me a chart that they would like me to look at, and I'll look at that chart and tell me one of the market that you're trading, and then I'll show you what an example of the homework should be looking like, so I can demonstrate it to you. Any chart. Can type the first person to type it in the chat, I'll do it. So if you type fast, then yours will be done, and then you can then go away and do exactly the same thing. Which currency pair, which market you want me to look at?
The XAU.
Okay, well we've got USD Jeffy, we've got USD Jeffy. Okay.
Oh, I didn't type it in the chat.
Huh?
I didn't type it in the chat. But can you have a
Okay.
look at that one?
Yeah. Okay. So we've got the USD Jeffy. Yeah. So we'll come to yours anyway. So let me just take off my real account and then get a demo. Let's say it's USD Jeffy here. Okay, right. So USD Jappy, USD Jappy. USD Jappy. Okay, I've got USD Jappy on this one. Let's do a differential. Let's get USD Jappy. Okay, right. USD Jappy. Okay, right. And this thing is a different research that I'm currently doing. This thing is doing really well. Okay, so this is what we've got now, right? So we're gonna look at the chart, and we're gonna scroll back to a point, right? Okay. Okay, so right, so if we say, for example, now this market, okay, we've got the market this is what the market is doing, okay. So you know what as well? Have I got that indicator on it here? No, I haven't got that indicator. But anyway, this market has been just rocket up here real nicely. So the market goes up to this point, okay? Then the market goes to this point, okay? Okay? So the market went all the way up, just just really boom like that. Okay? The market breaks up, pull back, break up. Now this bit here is where we call this aspects of our trading is this one here. Okay? So that's gonna be our first, this is what we call a double top. So the market breaks down, pull back. Now this high here is either equivalent to this one. We get a really nice pin bar, okay? Then we're looking to sell. So we call that a DT trade, which is a double top. Now, what will also some people, and let me tell you, this one has I would say over 80% win rate. If you get a setup like this, you've got a pin bar, a bearish pin bar, followed by a bearish engulfing candle, put an entry below, there like that, stop loss up there, target down here. Well, it's some people put the target there, but you want to put the target to probably the previous region. That's the entry, 7 pips below the low here. Okay, so the market comes back and take you in to the trade, because we don't go live into the trade. We let the market come to us rather than we just jumping into the market. Okay, and that's what we call a double top. Okay, so the market was in an uptrend, then pull back, then proceed to move back to previous high, must close to this region. You then place a sell trade, provided you get the signal. Okay, so here we've got what? Oh, look at this. This is exactly what I'm talking about. We've got a pin bar, we've got an engulfing. This is sweet. So then we're looking for an entry there. Okay, that's where we're looking for the entry. Okay, our stop loss would be above here. So if you're wrong, then our target is try and go for those regions, because you can clearly see here that the market was stagnant there. Okay, where bulls and bears were fighting. That's the region that I'm going to be going for. So my profit target would be approximately there. Okay, so that's where my profit target is going to be. However, say I didn't get that trade right, the market then breaks down to this zone before pulling back to this zone. Okay, now market breaks down to this zone. Sorry, break down, pull back up to this zone. So this was now my high. Okay, because what you want to do, guys, you see, we're gonna put here, because what we want is we want exactly. So we're gonna call this here double top. Okay, because what you want is you want to know exactly what your trades are going to be looking like. Okay, so that's our double top there. Okay, that's the reason why you're taking the trade there. That's how your double top should look like. It's not going to look any other way. Okay, now the market breaks up, break down, pull back to this zone, right, to previous, that zone there, sort of thing. Okay, so then when the market pulls back to this zone, okay, now I would have already, this is where I would have pulled this to. I'm sure where I would already pull this up to this point, right? So if the market pull back to this zone here, which is my previous, so this is like the market break up, pull back, right? This now would be like my low. Okay, then this now becomes my lower low. Okay, so this now is my low. Okay, so this is my low. Okay, and then, right, this now becomes What's this now going to become, guys? Who's going to tell me? Petra, what's this one going to become? Where I'm this region right here. Petra, you can type it in the
Sorry,
chat if
can
you
you
want to.
hear?
Huh?
Which zone? Which zone?
No, what are we going to
Is that
call
a
this
lower
region,
high?
right? Yeah, that's excellent. That's going to be called a lower high. Yeah, so that's going to be our lower high.
Okay.
Okay, so we got our lower high there. So we'll be looking for from here. Okay, we've already looked at the double top trade. Yeah, yeah, we've already looked at the double top because that's the double top trade. That's what it's going to look like, right? So this is going to be our lower high. That was our highest high now, yeah, or this one over here. Okay, so if you notice here, this trade here would be a scary one to try and take because this high was higher than that one. But if you notice now, it's even better because look, even though we get an engulfing, bearish engulfing plus a pin bar, you know, look what it almost happened. You could have got stopped. Well, it didn't come high enough to stop you out on this one, but look what happened. Come down, pull back. This is a better trade. Yeah. Okay. So this now we'll be looking to sell there. Okay. This would have been on your chart. Now, what you're not going to do, because remember, I'm saying to you and telling you all the stuff that you are not going to do, the stuff that I did. Now, if you don't do what I was doing, then you're going to have better outcomes at the start of your trading career. Okay. So, because I would have then thought, well, you know what? This thing can't go any lower. And then I would see this engulf and I want to buy. But look what happened. Buy it only went up and I say, yeah, I'm in profit. Comes back down, stop me out. Okay. So we're looking to sell there. But anyway, market breakdown. We'll be looking to sell here if we're getting a pin bar engulfing. Now the profit target is not big because we were looking for 180 stop loss to 200 and probably to where it was before. So we're looking at 190. So that's almost like a 1-to-1 trade risk reward. Okay. Now anyway, the market then breaks down from here, pull back down. Now the fact that this market pulls back to here to this zone, I could look to make a buy here because this is almost like it's made a double bottom. Okay, so this is what we're talking about now. So okay, so here we've got the double bottom. Okay, so we've got the double bottom. Market breaks up, pull back, but this low can't be too lower than this one. So the market, yeah, was in a downtrend, then pull back, then proceeds to move to the previous low, but must close to this region. So we can't then go and close down there. Okay, because that then wouldn't be qualified. Now, the real target sometimes when you get this is that the target will be looking to where it was before, because that's where it's likely going to go and probably turn around. Okay, so you've got to look at the risk reward. So this one here would be the risk, but the reward is bigger than this risk. I will put it on here. So sometimes you just got to make sure it's worth it. Okay, now, so then this is this, say for example, this was dropping. I got this. This say this was an engulfing. Okay, then it would have been like a double bottom, and then my target would be where it was before. However, I didn't get that, so I probably wouldn't then take this one. So anyway, this is a double top trade right there. Yeah, that's what that is. This is a lower high. This is the highest. This is a higher high. This is the highest high. This is high is lower than that one. Okay, but we're gonna call this a high. The market breaks down. Then what happens again? The market then break down, pull back. We could look to sell there. Market then break down even lower. So these two low, would just call this lower low. Just call these two low. Okay. Market then break down. So this is even a lower low. Market pull back again with the right signal. So we could look for a sell there. Yeah, we could look for a sell there. And all of these, remember, we're going to be preempting them because these zones are what we're going to use, right, to basically tell us where the market is like to turn back. Look, the market comes back to this zone where it was in the past. This is no higher high. But look at this now. This is a potential, and I would probably take this trade here. Okay. Now the market now start making lower highs, right? Lower high, right? Now the market breaks down. Now it comes back to this zone, gives me an engulfing, gives me a pin bar. Then ultimately, my thing is this: I'm going to be putting an entry there. I'm going to be targeting where it was before, which is 220 pip. My risk is 105 pips. That's a 2-to-1 trade. Okay. So that's what I'm going to be targeting. Okay. Now, if you get greedy and say, okay, it might go back up to these levels, then that's what you might be thinking of. But the fact that it's already now going down in a downtrend, then the likely chance is that, you will get some pips and then stop you. But look at the reversal signal there, this pin bar. Yeah. So you probably want to get out then. But then make sure you lock in your 1-to-1 first. Once you get the 1-to-1, and once it goes up to 168 there, I'll probably be, when the market closes on this evening, I'll be looking to probably move it up to say even there, up to this zone here, and lock it in once I see it close all the way up to there. It would come back and stop me outside of still gain 1-to-1. Okay. Now, anyway, now it seems to me that the market now is changing direction. Even because we've got these two double bottom here. Okay, so I'll be looking to buy there, as I said. So here, I'll be looking to buy. Okay. Now, the market then comes back up to this zone here. So I'm not sure the market might be changing direction. Okay. So the market then pulls up to this point. But look now, this is where the market was before. This is where it was, So now for me now, this market has changed direction slightly. Because it's no longer for me in a downtrend. It's at this point here, the market is wrapped up in a range. Yeah, and if we look carefully, we could see this. Where within this range here, the market clearly was, once we get this high, then the market comes down and then start consolidating within this range. And then now we get a range bound market where we're looking to buy there, sell there, buy there, sell there, buy there, sell there. Okay, that's what we're looking for now. So let's look at the range bound now. Okay. Any questions, guys? Any questions before we move on any further? Any questions? Okay. Now, where the range
Sorry,
bound? Yeah. Yeah.
I was just wondering, when are we able, how far are we able to go back with kind of
You can go as far back.
putting on?
Yeah, you can go as far back as you want to. Because what we're looking to create now, we're looking to create a template to say, if we see this, then that's what we're going to do. Because what we don't want to happen is this. For us to put on trades that doesn't look like what we say we're going to do. Because if it doesn't conform to this, then it's not one of our trading strategy. Because let me tell you, there are probably millions of different strategies you can find. Probably, in the hundreds of thousands, really, we can find. Because you've got, but then, for me personally, I'm looking at something with a high probability. Now, what you want is you want to have this in your template. Now, this here is my, let me see, is this one my trading? Yeah. This bit, for example, let me show you something here, right? So if you look at this, right? Now, what are my goals? You've got your goals. You've written down every single thing. Now, within this thing as well, right? Basically, you're having this bit so you know what it looks like, because you don't want to be guessing. If you're guessing, then it's not this. If you're guessing, it's not that. If you're guessing, it's not that. Now remember, the double bottom and the double top coincides with this, because this is our double top, even though we're predicting the trend change. Okay, going in an uptrend, yeah, this would be like our double bottom. Okay, but as I said, it can't be. So this is the only time we do one of the reversal trades. This is it's the exact same thing as the double bottom. Okay, this here is the exact same thing as a double top, but I just separate it as a trade on its own so people can identify with it. So therefore, so if people don't want, you could then say your first sell trade wouldn't be there. Your first sell trade would be here, which has a higher probability, because now you can clearly see that the market now has changed trend and decided to go in the opposite direction. Because what I could have done, right, I could have just given this to you and say, look, this is it. But no, I want you to get a feel of what you want your chart to look like, because this is the way I've set it up. I'm teaching you now and showing you exactly how I do it. Okay. Now, when you look at the chart, now, for one, you've done your analysis on the pin bar. You've done your analysis on the different markets. Now, you've done and you've looked and you've done your pin bar at the supply and demand zones. And you realize, say, for example, on the Euro Jappy, the pin bar was given over 80%. The engulfing was given 20% win rate. The pin bar combi or combo was given, 95%. So if the pin bar combi was giving me 95% of the supply and demand zone, probably that's the one that I'm going to look for my trigger. So my trigger here is either a pin bar and engulfing. Now, as I said to you, the pin bar engulfing has a higher probability. The only difference is that it requires a bit more risk because you're entering down there instead of there. Yeah, because you would have entered your trade here as an entry, but then if you're using the pin bar, you'd have entered there. So you'll be saving all of this, wastage there. Okay, I'm not sorry to use the word wastage, but that's what will be happening there. Okay, because but the only thing is that you're gonna have a bigger stop loss, so you're gonna have to put up a bit more risk than before. So I'm not saying it's but it has a higher probability. Okay, that's something that you could also you could investigate as well. But I've done the investigation. You could always look and tell me otherwise. So this market now is what we call the sideways market. So what I'll be looking at here, I'll be looking to sell there because it's still making lower highs. Market come back, pin bar at this zone. Yeah. If say for example, if it's gone up to here, if it's gone up to this point, then I'm not interested. Okay. Now I've got a pin bar. I'll be looking to sell. So I'll put an entry there. Okay. And sell, but I'll be selling it to this point because I've realized that the market now is moving within this range sort of thing. But anyway, the market move even further down to this zone. Okay. Okay, then the market breaks, pull back. Okay. Which is still lower than this one. Okay. Market breaks down again to this zone. Okay. So what I'll be looking at again, I'll be looking, okay, right. This market now seems like it's moving in a sort of sideways. So let's look at what the sideways market does for us. Okay, so the market breaks down, pull back, break down. Now the second touch. Now, if for example, if the market is going down, okay, pull back and then return to previous low demand zone, okay. With the right signal, then buy. Continue to buy until it breaks outside of this range. Basically, your first buy and sell point will be at the second touch. So look at the second touch, right? So the market breaks back, pull back, okay, to that zone, right? So we're looking to buy there. The market breaks down. We're not going to sell there, okay? Because we realize now, look, the market comes back to where it was before, okay? Even though we had an engulfing candle there. Market come back and touch there. Pull back. Now here is when we were looking to sell. So we're looking to sell there. Okay. Now the market then breaks down to this zone. We made some money there because remember why we've got these supply and demand zones, because we want to know where the turning points are for that market. Pull back up to here, touch again, we look to sell again. So range bound, okay, trade. The market then moves all the way back to where it was. Now we could look to buy here, but then, yeah, if it breaks below here, then you don't really want to chance a buy like that. Because once it start breaking below where we're at, and significantly below there, then you'd want to see the dust settle between the sellers and buyers. Because remember, ultimately, which I didn't understand, I thought it was some machine that we're trading with, and so on and so forth. We're trading, even though we're trading against algorithms and all sorts of sophisticated machines, it's actually people anyway. It's the big guys, are going to put on the big trades and so on. Okay, people like ourselves, and how people feel. Okay, now, once it breaks below outside of this range, you probably don't want to take that trade anymore. Okay, now the same thing. Note that both second touch are considered as double top as well and double bottom. Okay, so remember, a lot of this thing is overlapping. Okay, as I said, if it breaks, be cautious about taking any trade there. Okay, so here now, this would be considered my what? Right, let me see now. Yeah. So this is going to be considered now. Let me see. Now, Christopher, would I place a buy here? Chris? Chris? Ahmed?
Yes.
Would I place a buy here?
No.
No, okay. Where would I place a buy? What do we call this one?
Yeah, double bottom.
Yeah, so this one with that one be my double bottom, and this would be like this would be my second touch. So this is where I would want to put my buy, okay? So that's where I'm going to put my buy, okay? Now, Jessica, would I put a sell here?
No.
Yes, we would what? Because you know why would we?
I mean, potentially.
Because if you notice here, goes down, it's coming back to exactly the same point. Yeah?
Okay.
You see what I'm saying? Now we've got an engulfing there. So if we look back at this one here, can you say it was in that range, and every time it comes back to that zone, then I'm looking to sell? Because now this market now for us is in, if you notice, it goes up to this point, comes back, goes up to this point, comes back, goes up to the same point, comes back. So we'll be looking to sell there. But we wouldn't look to buy there, because this one because it's already broken lower than all of these lows. It's already made lower lows. Yeah. This low is lower than that. This low is lower than that one. This low is lower than that one. Yeah. So I wouldn't want to buy there because of this thing. But then it breaks up, pull back to the same zone. If we get the right signal, pin bar engulfing, then we're looking to buy there. Now, right, Anthony, would we look to buy here? Would we look to sell here?
Yes.
Yes, why?
Because it moves back to the same zone.
Yeah, it's within the same zone. And also, if you look at it again, it's what a range bound market, and it's again like our double top again, but it's more range bound because every time the market goes within this range here, every time it comes up here, it goes back down. Okay, now here, would we look to buy here? Would we look to buy here? Let me see. Petra, would we look to buy here?
Would we buy that? Yes.
Yes, we would buy there, regardless of whatever the outcome. Because remember, it comes there, excellent there, Petra. So comes there, comes there, comes there. So we're looking to buy. Now, we would then be expecting the market to move from here back up to there. because it's in a range. Let's look what happens. It did exactly that. But what happens here, the market then, we get this, comes up to there, right? You know, would have probably entered there, comes up, came, stop us out. And we're thinking, you know what, nothing is happening here, stop me out, and this is what happens normally, right? Because they know that a lot of people have placed buy trades here, okay? So it's very likely that the market is going to do exactly the same thing. But what they need to do sometimes is flush out these people who have put their buy trades there, yeah, with a stop loss low as that one. So what it will come and do is to take this person out, take out all these people who put the stop loss there, and that's the reason why it comes and flush them out there, okay? So then all of these people who bought there, their stop loss would be hit, yeah, even if they put it lower than this one. The stop loss would be hit, they'll be out the trade, feeling really miserable and thinking, you know, why is the market gone against me? I went in there, went up there, made some money. But then the only other thing I would say, because a lot of times I've missed out on this move, because look, it's still the same range. Because look, see it carried on up to there again. Let's see if it come back down. It comes back down again to the same point again after going up to that point. Okay, but then where are we now? Okay, so this is where we're at now. So the market then was in a range before, still into that range. So you see it still goes up to there, which is the same range that's been in. But then it break down, pull back, right, up to this point, then break all the way down to here, pull back up to there, break all the way down to here, pull back to there, break all the way down to here, pull back up to there, break all the way down to here, pull back up to there. Now, the likely chance, what will happen with this market now, is that it comes back up to this zone here, where there was fight in the past, and it might just pull back in this direction. Now remember, I am looking at this, and let's show you what we're looking at now. We're just looking at the ebbs and flow of the market here. And if you notice here, guys, the market then sideways. So for me, I would probably look to sell here, okay, because the market breakdown, pull back, okay. So we've got this point here where it breaks and pull back to the same. But what happened? The market started fighting there. So what didn't happen is that the market then just carry on all the way up to there. Now, because this market has been in a downtrend, this is what I'm looking for, the market to do this. Break down slightly, pull back up to this zone, and then I'll be looking to sell there if I can get the right signal. If not, because the market was in a downtrend, I'll be looking for either this then. So the market then, say it did this, I'll be looking for it to break back down to this zone, okay, and for it then to then move like that, okay? Because if you notice here, this here was, we've got this region, we've got this region here, we've got this region here, okay? Now lower high, lower high, lower high, right? But then the market then breaks up above my lower high, okay? So it seems like the market now decides to change direction, okay? So if the market then breaks up, pull back to my previous zone, now that then is going to be my first real proper buy, which is this. I'll be looking to buy there, okay? But this market then sometimes will do this. It will just zone and carry on all the way back up to where it was before, okay? And then if that happens, so I would have missed out on this move here, okay? I can either then do something similar again. But remember, all of these things needs to be preempted on your chart. You can't just go and look at your chart and decide that you are going to, right, place a trade. You can't do that. If you ever do those sort of things, then you will never be successful in trading. You've got to plan. Okay, what they said, if you fail to plan, plan to fail. So you've got to plan these trades, and this is what I do on a Sunday. I create all of these trades before I actually look at the market, because you'll be tempted to take whatever. And you can look at the charts, and you can actually, your brain will create trades for you. You can't afford to do that. Okay, so let's have a quick, because I've got another session. So let's have a look at this quickly then. I thought I got carried away. Yeah. Right, so basically, this is what we've got. Low, 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 and so on, right? 4 different strategies there, yeah? Then we've got, I want to see something lower, high, lower, low, so on. Where you're going to buy, and this, remember, this is our reversal. This is like our double bottom trade, right? Market, this is going to be our bet. This is when the market breaks up, pull back to the previous zone. Okay, we're looking to buy, okay? Then we have the same thing here. We've got the double top, reversal trade here. Look to sell, lower high, lower high, lower high. Yeah, break up again, okay? Then we've got the double bottom, okay? Market breaks down to that point, okay? So we're looking, because we're going to mark these things in our chart. And what you're going to do, everything that you've done, you're going to print screen it. So you're going to have it, because that's what you're going to cut and paste into your trading plan. So when you look at your charts at nights, that's what you're looking for. If you don't see those things, you don't take the trade. Okay? Same thing here again. We've got our double top. Okay? Now, so as I said, these overlap. Now, look again. We've got the first touch of the zone. Pull back. Come back to this zone. Okay? Now that's my first touch. My second touch. Now my second touch is where, like my double bottom. Then this is my first touch. I'm not looking to touch. I'm not looking to. The market comes back. We get the right signal there. Then we're looking to sell. Okay, and that's our range bound market. And sometimes if it's challenging for you to spot the range bound, just do this on the chart. Go into insert, go into shapes, and then go into rectangle, and then do this. Look at this. Once you've got a box, and if the market is just within that box, then you know that's a range bound market. So it's just been ranging there before breaking up. I'm looking for it to pull back to this zone before pulling back up. So that's a possibility. Okay, or it could just carry on straight. Okay, now some people, was a breakout trader, they'll look to put an entry there, put a stop loss there, and look for this big move. Okay, but remember, as I said, there's so many different strategies. Now I've tried most of them, and these for me personally, they just basically give me a bit more confidence in myself, give me more confidence in the market, and also the probability on these trades are much higher. Okay, guys, I've got to go now. I will post this thing into on my website, so you'll have access to it. And one last
Before you
question.
go.
Yeah.
Before you go, I was just wondering, so do you do this every night?
Every night in terms of no, I do I've got a session on a Thursday. I've got 2 sessions.
Sorry, no. So what I meant was,
Okay.
you were saying that at the end of the night, you need to check to make sure you get these signals, and if you don't get the signals, then don't take the trade.
Yeah.
So every night before you plan on taking a trade the next day,
Yeah.
you kind of have a look at the signals in the market. Is that
Okay,
right?
so let me show you now. At 10 o'clock, let me just give me 1 minute. Let me just send a text. Just 1 minute. Right. Just give me 1 minute. Let me show you what I do at night. Okay, right. Okay, so this is what I do. This is my chart, my trading thing, yeah. Okay, so what I do is, you make sure you look at your trading plan. I'm telling you, it's really important. Even if a trading plan is online, yeah. For example, this is my trading plan here. Yeah. So you go into here and And what you make sure you do is there's certain rules. There's certain rules that you got to follow. Okay. 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 So I will always go through my trading plan and rituals before placing a trade. I will set my trades and walk away. Don't watch as trades are there as they're happening. I will never place a trade while being distracted by other things in the background. I must learn not to have an emotional attachment to the to trade and act in the same way regardless of any outcome that happens to improve mental stability. I will wait for the trades to come to me instead of trying to force. I will always follow my trading plan. Now, even though you write down these things, you've got to read it just to get it. And even I'm telling you, even though it's there and I don't know. Yeah. Okay. So this is me now. I've read my thing. So I go on now and I'm looking. This is at 10 at night. I look. There's nothing there. Okay. There's nothing there. There's nothing there. Possibility. Okay. Possibility. This one is already triggered. Possibility. I've just made money on this one. Possibility. Possibility. But remember, the only reason why I've got so many charts is because I've got students who said, Marlon, I've sent out a trade on this one. Okay. Here, this is my markets. Okay. Those are my markets. Okay. Now I have got, but also this is what I do. Say for example, I've said to you 4 possibilities just now. This is then what I would do next. Okay. I would go into my FX book, right? And say I found 4 or 5 trade setups. Say I was to take, say I had all of those, right? And they're on my markets, right? And I found 4 trades that I was going to take. Then I would go to correlation. And then those 4 trades or 5 trades that I see, I'll highlight them. Then look at them and say, okay, these 3 are, correlated over, say, 91%. So it's pointless taking those 2. So if the euro and the GBP lines up, then basically, it's pointless. Now, back in the days, I would put a trade on the Euro USD and the same trade on the Euro and the GBP USD, not realizing about correlation. Make sense? So we've got to make sure that we've got all of these things together. That's the reason why in my trading plan, this is one of the first thing about the correlation. Okay, to make sure that I'm aware of it. Okay, so then I look and I say, okay. Now remember, you're only going to have, some people are going to have 2, some people are going to have 5 charts. But I said don't go over 7. Now, possibility here, because I'm saying, look, if the market breaks down and come back to this zone, but however, this market is definitely in an uptrend. You make it smaller. Okay, this market, is clearly, it's just pull back to this zone and then pull back up. So I should have bought from here. But I just didn't get the signal. But here when the market breaks down and then pull back, now this market, if it had pulled back to say there and then start springing higher again, then I would have clearly said it's an uptrend. But also let's have a look at this and see what is happening here. The market basically, if you think about it, right, look at this, the market then goes up to here, pull back down to this zone. If you notice there, this zone here, every time the market comes to this zone, something happens there. Okay, so it breaks, pull back to this zone, pulls back to this zone, comes back down. For breaking above it, come back up to this high where it was, pull back to this zone now, coming back up to this zone. So the likely chance is that this market might come back down to here. So that's what I'm looking forward to. But anytime I'm confused and it doesn't fall into what I want, based on my trading plan, then I'm not taking the trade. Okay, here again, this one here, if it pulls back down to here, then I'm probably interested, because this here was resistance. Now, which is basically the supply zone. Now it has to come to this zone, and then that's the time when I'll probably consider buying. Yeah. Now here I'm looking to get into to this one here, because if you notice here, if you look at this one, okay, it's just been up there, down there, up there, and I've made money on this one. Okay. Got stopped out because the market, it was going down, and then I just move it to there, and then it came back and stopped me because I was expecting to go all the way down to here. So I've actually put a trade there now. I'm currently waiting for this trade to trigger. This one could possibly be, this one is, it's been clearly just within this range before breaking out, pulling back down to here. Yeah, before moving back up. This could possibly be a double top. But guess what? I haven't put anything at all on this chart regarding that information. So I can't take a trade. If I don't put something on the chart, then I can't. Now here, I basically put to buy there. I didn't take that trade. Okay, but there's nothing there. I was looking for the market to come all the way up to here. I was looking for it to come all the way up to there. The market doesn't do what I'm expecting it to do, then I'm not going to take the trade. And it goes on and on and on and on the same. Yeah. Okay, guys, but I've got to go now. Okay. So anyway, enjoy the rest of the evening, and looking forward to those trades that you're gonna show me on the charts. Okay. And can you make sure for me, please? Yeah. Can you make sure that you've got because next week we'll be looking at those goals and plans and so on. So make sure you've got it not like this, but like that on the chart. Okay, like this one. Okay, like this one, and it doesn't matter whichever market you want to find it on. All I want to see is this now. So because what we're doing, we're creating our blueprint of what our trading will look like. Okay. Thank you, guys. Have a good night.
Thank you. You too.
Thank
Bye.
you.
Yeah,
Good night.
bye-bye.
Good night.
Bye.
Bye,
Bye.
everyone. Thank you.